What happens if your mortgage payment jumps from an escrow shortage? Your mortgage didn't change, your interest rate didn't change, so why did your payment jump hundreds of dollars overnight? You open the app and it's like, how is this real? Most of the time, it's one thing, escrow, and when escrow comes up short, your payment can spike fast. What we're covering. In this video, I'm going to break this down in plain English. What escrow is, what an escrow shortage really means, why the jump feels so big, and what happens next if you don't catch it quickly. Then I'll give you a simple checklist to respond fast, plus 3 warning signs you can spot before the jump hits. What escrow is? Think of your mortgage payment like a bundle. One part is your actual loan payment. That's principal and interest. The other part is escrow. Escrow is basically a bill savings account. Your lender manages each month. They collect extra money from you, and they hold it. Then they use that money to pay 2 big bills for you, property taxes and homeowner's insurance. So your mortgage payment is really your loan payment plus taxes plus insurance. That's why the total number can change, even when your loan didn't. The moment it changes, escrow analysis. Here's what usually happens. Once a year, your mortgage servicer checks the escrow account. This is called an escrow analysis. They ask one question. Do we have enough money to pay the next year of taxes and insurance? If the answer is no, you get an escrow shortage. And that's when the payment jump starts. What an escrow shortage means. An escrow shortage is simple. It means the escrow account didn't have enough money. Not because you missed a payment, not because you did something wrong. It's usually because the bills got bigger than expected. 3 common reasons. 1. Property taxes went up. Maybe your home was reassessed. Maybe rates changed. Maybe an exemption dropped off. 2. Homeowner's insurance went up. This is a big one lately. Premiums can jump for all kinds of reasons. 3. The estimate was off. The servicer predicted the bills wrong, or the timing changed, or the insurance changed mid-year, so the escrow account is short and now the servicer has to fix it. What happens first? The first thing that happens is you get a notice. It could be a letter in the mail, or an email, or a message in your mortgage portal. It usually says something like escrow analysis, escrow review, or annual escrow statement. Inside, look for 2 numbers. Number 1, the shortage amount. Number 2, your new monthly payment. That's the moment people panic, because the new number can be way higher. Why the jump feels huge? The double hit. Here's the part most people don't realize. Your payment often goes up for how? 2 reasons at the same time. Reason 1, your taxes and insurance are higher now, so your monthly escrow deposit goes up going forward. Reason 2, you also have to pay back the shortage from last year. That's a catch-up charge. So you're paying more going forward, plus paying back the past. That's the double hit. This is why someone's payment can jump $300, $500, even more. It's not always just higher taxes. It's higher taxes plus the catch-up, the options they give you. Most servicers give you 2 choices. Option 1, pay the shortage in a lump sum. That hurts now, but it keeps the monthly payment lower. Option 2, spread the shortage over 12 months. That's the most common choice, because most people don't have a random $2,000 to $5,000 sitting around. And sometimes there's a middle option people miss, a partial payment. You can ask if you're allowed to pay part of the shortage now. Even paying some can reduce. The monthly jump. What changes next? Next domino is usually this. Autopay fails. Your autopay was set for the old amount. Your bank account was planned for the old amount. Then the new payment hits and it bounces. Now you get a late fee. Now you get a past due notice. Now you're stressed. And this is how people fall behind even when they're responsible. Not because they stopped paying, because the number changed fast. The sneaky risk. Here's a risk people don't connect to escrow: insurance. If your homeowner's insurance lapses, gets canceled, or isn't confirmed. So the lender can step in. They can buy insurance for the property themselves. This is often called force-placed insurance, and it's usually expensive, like way more expensive. If that happens, your escrow payment can jump again, sometimes even worse than the first time. So if your shortage is insurance related, make sure your policy is active and correct, and make sure your servicer has the updated proof of insurance. The real danger. Here's the real danger. It's not just that the payment is higher, it's that you have less room for mistakes. When your payment jumps, your budget gets tight. If you miss one payment, things move faster than people expect. Every loan is different. Every state is different. But the longer you're late, the more serious the notices get. So you don't want to wait and see. You want to act early. What to do immediately. Simple checklist. If your payment jumped, do this in order. Step 1. Open the escrow analysis statement. Find the shortage amount. Don't guess. Look at the exact number. Step 2. Figure out what caused it. Was it taxes or insurance? Pull your property tax bill or pull your insurance renewal. You're looking for what changed. Step 3. Check for mistakes. This matters. Look for things like wrong premium amount, wrong dates, duplicate, insurance payments, missing exemptions, escrow, paying the wrong tax amount. If something is clearly wrong, contact the servicer. Send the documents, keep it simple, one issue at a time. Step 4. Ask about paying part of the shortage. If you can pay even some of it now, your monthly jump may be smaller. Step 5. If insurance caused the jump, shop around. Even small changes in premium can change escrow a lot. Step 6. If taxes cause the jump, check your assessment and exemptions. Some areas allow appeals or corrections. Some areas have caps or homestead exemptions. This depends on where you live. Step 7. Update autopay right away. This is huge. If you don't update autopay, the late fee domino starts again. Step 8. If you can't afford the new payment, call your servicer early. Don't wait until you're late. Ask about options. Ask what programs exist. The earlier you contact them, the better. This isn't personal. Financial advice. It's just the practical order of operations to avoid getting crushed by the timeline. 3 warning signs before it hits now. How do you spot this early? 3 signs. Sign 1. Your insurance renewal jumps. That usually means escrow will jump next. Sign 2. Your property taxes go up. Same story. Sign 3. You see an escrow review notice in your portal. That often shows up right before the new payment is set. If you see any of these, don't ignore them. Quick myths. Let's kill a few myths fast. Myth 1. The lender is stealing from me. Most of the time, it's just math reacting to higher bills. Myth 2. If I pay extra toward my mortgage, escrow fixes itself. Extra money toward principal doesn't automatically fix escrow. Escrow is separate. Myth 3. My payment will go back down next month. Sometimes it drops after the shortage is repaid, but if your taxes and insurance stayed high, the new baseline can stay higher. Wrap up bottom line. An escrow shortage isn't random. It's usually higher taxes, higher insurance, or a bad estimate, and your payment jumps for 2 reasons. Higher bills going forward, plus a catch-up for the shortage. Catch it early, read the notice, fix autopay, and don't wait until you're late to ask for options. What happens if your homeowner's insurance drops you and your lender finds out? Because that can trigger a chain reaction that makes escrow look small. If you enjoyed this video, hit like, subscribe, and turn on the notification bell.